It's the midweek edition of Business Morning. Good morning and welcome to the program. I'm Chimezie Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's in the news. The Central Bank's Monetary Policy Committee has voted to keep its interest rate unchanged for the fourth time since September 2020, citing the fragility of Nigeria's economy. The governor of the CBN, Mr. Godwin Emefiele, who made the announcement at the end of the two-day rates decision meeting of the MPC in Abuja, said the committee voted to leave MPR at 11.5%, cash reserve ratio at 27.5%, and liquidity ratio at 30%. Mr. Emefiele explained that the move is expected to allow further economic growth after the country exited recession amid rising inflation. Let's take a listen.
Every 8 weeks, the 10-member Monetary Policy Committee is faced with three choices: to tighten, hold, or loosen in determining an appropriate stance for policy in the short to medium term. Again, it has unanimously chosen to hold.
The choice, therefore, was between loosening the stance of policy to ease credit further, or tighten to moderate price development, or maintain a hold stance in order to allow previous policy measures to continue to permeate the economy while observing global and domestic developments. Based on the above considerations, the MPC made the decision to hold all policy parameters constant.
As of April of 2021, the country's inflation rate eased by 18.12%, while its GDP increased by 0.51%, driven mostly by agriculture and industry. According to the CBN governor, the liquidity mop-up is yielding results.
The twin problems confronting the Nigerian economy and that must be addressed relates to stagflation caused by rising inflation, with output, in this case GDP, contracting at the same time.
The CBN is maintaining its ban on cryptocurrency transactions in Nigerian banks, and despite calls from governors seeking further deferment on payment of bailout loans, the CBN governor stands his ground.
Those who invented crypto said it is encrypted. When they say it is encrypted, it means that whatever is happening between me and you is only known to the two of us. And you know what? In case I defraud you, because it's encrypted, you can't even disclose my name. You can't even get your money back. That is not what a responsible central bank will support. On this issue of state government, they're going to pay their loans. The banks have written to finance, and they have copied me that they want their money. If it was a bilateral loan agreement, in fact, there's privacy of contract here. I'm not part of it, so they should pay their loans.
Now we've come to the end of this press
The MPC is also asking that the federal government tackle insecurity immediately, stating its adverse effects on the war against inflation in the country. The MPC has also asked that the federal government ensure that 70% of the Nigerian population are vaccinated against COVID-19 if the country is to make any form of economic recovery. Kayla Megwa, Channels Television News.
Well, I'm trying to understand what the central bank governor was trying to say about crypto being encrypted.
Yeah, the thing about blockchain is actually a public ledger, so everybody can see transactions, but who am I to say?
Absolutely.
Yeah.
Anyway, Lafarge Africa PLC, a major player in the Nigerian cement market and construction industry, has held its 62nd annual general meeting in Lagos. The company declared the payment of 16.11 billion naira to its shareholders as the final dividend for the period ended 31st of December 2020. Let's take a listen.
It's time for Lafarge Africa PLC's board of directors to give account of stewardship to its shareholders and investors. Lafarge Africa is on a growth trajectory. Its revenue grew year-on-year by 8% from 2019 to 2020. And in the same financial year, the company's profit after tax rose by 99%. The other metrics are also in the positives.
I still have to welcome you to this board. As our chairman, I wish you a successful tenure.
The shareholders react to the company's financial standing and also commend its sustainable initiatives.
Declaration of dividend.
The chairman declares the dividend recommended by the board and puts the motion up for voting.
I hereby move that a dividend of ₦1 per ordinary share amounting to 16,407,795,721 naira be paid in respect of the year ended 31st December 2020.
It's time to vote. The shareholders are expected to vote on payment of dividend, approval of auditors and directors' remuneration, elect members of the audit committee, among other resolutions.
We are very delighted with a very, very impressive financial performance during this pandemic period. It is to our delight that we are being paid, not only being paid, and we are also given an expectation for a good future.
The company's management and board say it will continue to deliver on its promises to shareholders and investors.
The company focus is to be in a sold-out situation, and we can sell all what we can produce. So that's what we focus on.
We are assiduously committed, the management and the board, to making sure that we give an improved result to all our stakeholders. This includes our staff, include our shareholders, and include the community of Nigeria.
Lafarge Africa has a wide range of cement solutions designed to meet all production and construction needs. The company says it will continue to conduct its business without losing sight of its sustainable development initiatives in the areas of circular economy, climate, community, and environment.
All right, we'll look at Polaris Bank now. That bank has just released its full-year audited financial results for the year ended December 2020, posting a profit before tax of 28.9 billion naira. The results, which show the bank's second-year performance scorecard after 2 years of operation, have further consolidated the bank's position as focused on the path of profitability, growth, and value creation. What's driving the growth of this bank in a challenging environment like Nigeria? Let's have this conversation with Johnson Chukwu, the Managing Director, Cowrie Asset Management Limited. Thank you very much, Mr. Chukwu, for joining us on the program.
Thank you, Chimezie, for having me.
So Polaris came into existence sometime in 2018, and of course now and take over the Sky Bank that we used to know. How would you describe the bank's journey so far in the Nigerian banking space?
My take is that Polaris Bank has been consistent in their strategy as a very prudent financial institution. If you look at the history of the bank since it came into being after it was breached from Sky Bank, it obviously took all the positive from Sky Bank and also dropped the negative from Sky Bank. One of those negatives was a very aggressive risk asset creation. If you look at the Polaris balance sheet, you'll find that the bank risk asset creation has been on a very slow pace. For instance, it's a total loan to total deposit about 28%. And if you look at the structure of its earnings, interest from fixed income instruments account about 54% of the total income from the bank. And you also seen consistently it has been reducing its cost of debt or cost of risk assets from about 2.45% to about 1.5%. One of the lowest in the industry. So the key thing about the bank is that the bank has been consistent, has been faithful to its policy as an institution that is prudent in its risk asset creation. That's a conservative entity that is not too bullish when it comes to taking risk.
All right, Mr. Chukwu, but looking at the bank's 2020 result, how impressive is that to you? You know, the bank is reporting 4% increase in profit before tax.
Yes, in fact, if you actually want to appreciate what the bank did last year, you even look at their profit after tax, which grew to 28 billion naira on a shareholders fund of just 98 billion. The bank made a return of 30%, in fact, 30.3% on equity, the highest in the industry. The average industry return is about 13.8% on equity, return on equity. But the bank recorded 30.3% return on equity and about 2.47% return on assets when the industry average is about 1.5%. So the bank showed a lot of, it was able to navigate the headwinds that were associated with last year. If you remember, last year was a year of COVID, as we all recognize, but the bank was able to navigate through that, probably because of the efficiency of its balance sheet. Because when you look at the bank's balance sheet, you look at the liability side of the balance sheet, and you realize that low interest bearing liabilities account for 69% of the total liabilities of the bank. That is current account, savings account, domiciliary account balances accounted for about 69% of the bank's total liabilities. So these are the reasons why the bank was able to navigate the headwinds associated with 2020.
Now, in a competitive environment such as the banking industry, for you, what stands Polaris Bank out in terms of its strategies of keeping its customers?
Well, one of the things I think they are doing well is what you may call personalized banking services. If you remember, they just launched a fintech-driven application which they have been aggressively marketing to their customers. Basically, they want to serve their customers from any channel of delivery. And that will bring a lot of convenience to their customers. As you know, I've always believed that fintech is the next phase of banking and it's going to disrupt banking, but it's also going to serve as an enabler. So for a bank like Polaris, has adopted fintech as an enabler and is reaching out to their customers, creating multiple service delivery channels and providing convenience to their customers. That would be their next competitive advantage. I had mentioned the issue of prudent risk asset creation, very conservative policy when it comes to aggressiveness and risk asset assumption, and then maintaining a very efficient deposit liability. If you look at last year, despite a drop, of course, we know interest rates collapsed last year. All interest-bearing assets had a drop in their yield last year. So the bank suffered about 18% drop in their interest income. But net interest income dropped only 2.7%, which means the bank was able to bring down its interest expense by as much as 50%, despite growing its deposit liability from about 838 billion to about 914 billion naira. A growth of about 7% in total deposit. It was still able to bring the total interest expense down by 50%. These are efficiencies that the bank has shown, which is actually its competitive advantage or its unique selling points.
All right, let's look at support for businesses, particularly the SMEs. How would you say Polaris Bank has fared in this area? You know, some have argued that the banks are not doing enough.
What I would say, if you look at, if you actually decompose their lending, and you will realize that a lot of funds, they are providing on lending facilities, a lot of intervention funds from the central bank, from the Bank of Industries. By the time you look at their total loan portfolio and look at their deposit liabilities, so you see that the bank is actually standing the gap between the small and medium-scale enterprises and institutional lenders or development finance lenders like central bank, like Bank of Industries. So it's providing support through these windows to small and medium-scale enterprises.
Now, we have seen a number of Tier 1 banks making a strategic intent in sub-Saharan Africa to take advantage of the AfCFTA and, of course, the single area air transport market. How strategically positioned is Polaris Bank in this drive?
I think the bank is taking it one step at a time. We all know the bank's history. I mean, it's a debate of Skybank, and we know Skybank ran into problems through excessive aggressiveness in risk asset creation. So my take is that if you look at the bank strategy, the first is to dominate the local market. And the Nigerian banking industry, beyond the South African banking industry, is still the largest in African economy. So the first approach is dominate your local market. With its foray into fintech, is going to have a material impact on its spread and presence in the local market. And from there, you can launch out to the sub-Saharan African market. But you must have your local base. You must have a dominant local base. And I think that's what the bank is driving towards.
All right. Do you think that Nigerian banks have the necessary capital and skills to manage this cross-border, political and economic and, some social risk, in this difficult terrain of sub-Saharan Africa?
What I would say that, there's what they call risk-based capital. And for those who are foraying into the African market, they must have sufficient risk-based capital to support their level of operation. And when you go to any of these local markets, you must meet the regulatory capital in those local markets, which means that you must have the capacity to operate in that local market as a separate entity, as a separate financial entity, instead of relying solely as a subsidiary of a Nigerian parent bank. So that would mean that the banks who are actually spreading out to the West African markets have the have the capital base to be in each of these markets, because you must fund those subsidiaries to the extent minimum required capital base of those local economies as stipulated by regulators. On that basis, I think those who are going to that market are meeting the requirement of the market. But there are also Nigerian banks have pulled back from some markets where they couldn't compete, or they felt that the capital requirement did not provide them enough return for the level of risk we are taking.
Now, Fitch and S&P had feared that Nigerian banks' risk assets, which are 30% in foreign currency denominated assets, poses a major risk of an asset liability mismatch, which could make them not only vulnerable to a squeeze in cross-border liability calls, but also could make them exposed to any adjustment in the value of the naira in the foreign exchange market. Therefore, the twin exposure and a liquidity crunch could create a problem for Nigerian banks from foreign regulators. Do you agree that these risks are now elevated amongst Nigerian banks? If so, where is Polaris Bank in all of these?
Okay, let me start from the first part of your question. Clearly, because we have an unstable foreign exchange regime, we have the economy struggling to meet foreign exchange obligations. So the currency seems to be under pressure, and then there's a tendency that the currency could depreciate further. So if you are holding foreign currency liabilities that are not matched by foreign currency assets, and the naira moves southwards, you're going to have a liability converted to naira that is higher than the asset that is covering it. Particularly if those foreign currency liabilities were not lent in foreign currency assets, in a similar currency asset. So the risk exists. But that risk will be heightened or elevated if the Nigerian banks cannot refinance those liabilities. We've seen consistently Nigerian banks come back to the Eurobond market, issue fresh Eurobonds to refinance maturing Eurobonds. So as long as that liquidity is available in international capital market, Nigerian banks may not have so much of problems. Then in terms of liquidity, the other aspect is in terms of exchange rate risk, which is obviously very apparent. Like I said, provided you do not match those assets, those liabilities with the assets in similar currency. Some of those Nigerian banks have lent those foreign currency liabilities in foreign currency assets. But some of those currency assets are weakened as a result of weak macroeconomic environment in the country. So that will bring a situation where they will not be able to realize the cash flow from those assets to meet the liability. So that will pose some risk. Back to Polaris Bank. Polaris Bank, if you look at the details of their balance sheet, you find out that their foreign currency exposure is quite limited. And it's limited to intervention funds that have been provided for on-lending activities. So I think they do not have so much risk when it comes to foreign currency, liability mismatch, or exchange rate risk as it relates to foreign currency borrowing.
All right, Mr. Chukwu, before I let you go, what is your outlook for the banking sector and Polaris Bank in particular?
I think the outlook for the banking industry is going to be better this year. We've seen an improvement in GDP growth rate from 0.11% to 0.51%. We've seen a slowdown in inflation. So if this trend continues, you're going to see an improvement in economic environment, but particularly if we're able to address the insecurity situation in the country. So for Polaris Bank, they are actually at a position to gain more because they have a lot of headroom to create risk assets. They are, like I said earlier, their total risk asset to total deposit is just about 28%. So they have a lot of headroom to create risk assets as interest are going up. Again, because they are quite strong in fixed income instruments, we've also seen treasury bills yield for 364-day bills move to as high as 9.75%, which if you adjust for the discount factor and the interest, the tax implications, you will actually have a yield on 3-4-day instruments as high as more than 10%. So, and they are quite strong in that segment of investment space. So I think they have a stronger prospect of higher profitability in 2021 than they even made in 2020.
brighter outlook. Thank you very much, Mr. Chukwu, for sharing your time with us today. Do enjoy the rest of the day.
My pleasure.
We take a break, and when we come back, FX Commodities Market Update is next.
Welcome back. On the AFX Commodities Exchange, the total value of a number of contracts traded declined in the week of May 18th to 24th, while there was an uptick in the number of deals and on the AFX Commodities Index. For more now, let's hear from Michael Martin, Portfolio Manager at AFX. Hello, Michael.
Hello, Ladi. Good morning. Thank you for having me once again.
Good morning. Great to have you. Could you take us through the week's activities?
Of course. So if you look at the table in front of you, the total value of transactions traded on the exchange fell by 97.67% from around 0.43 billion naira to close the trading week at 0.01 billion naira. The total number of contracts traded on the exchange also fell by 97.49% from 21,363 contracts to close at just 537 contracts. The total number of deals, however, went up by 100% from 7 deals to close the trading week at 14 deals. The AFX Commodities Index, which is the ACI, went up slightly by 3.31% from 386.27 to close the trading week at 399.07. The AFX Export Index still remains unchanged, remaining at 146.57. And as regards the volume of transactions executed on the exchange, we generally saw a fall in the number of in the volume of transactions on the exchange, with the only exceptions being paddy rice, which went up from 0 number of contracts to 80 contracts for the week under review, and then also cashew, which went up from 8 contracts to 127 contracts in the week under consideration. With regards to the price changes on the exchange, we saw a significant increase in the price of paddy rice, which went up by 15.40%. Gaining 2,895 naira per contract to close the trading week at 21,695 naira. We also saw an increase in the price of cashew nut, which went up by 3.37%, gaining 1,450 naira in the contract value to close the trading week at 44,500 naira per contract. And last but not least, with regards to top gainers, we saw maize go up slightly by 0.84%, gaining 162 naira in the contract value to close the trading week at 19,362 naira per contract. And last but not least, we have the fair trade exchange traded commodity, which remained unchanged in the week under review, remaining at 14,008 naira per contract. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afxnigeria.com. And also, if you want to get started trading commodities, whether it's maize or soybean or paddy rice that you want to buy, or you want to buy fixed income note, you can always download our app, which is available on iOS and Android.
Yeah, Michael, thanks for taking us through those activities there. Now, AFX Commodities Exchange is arguably one of the most successful exchanges in Africa. What are some of the key infrastructure that you put in place for the exchange model to work?
So at the outset, one of the first few things that we figured out that it was impossible for you to act as an exchange, particularly within the Nigerian market, without the ability to guarantee the supply of commodities. So when we saw this problem, we deemed it necessary to create an infrastructure, right, that would facilitate a last mile interaction with smallholder farmers, and this is with regards to production. But even beyond that, our ability to play across every single value chain, so that's from production to aggregation to storage, to distribution and eventual delivery to the buyer, and also even more than that, providing financing for every single player, whether that's the smallholder farmer or even the processor, I believe is what differentiates us from every other exchange that currently exists. So it is possible that you find other entities that may be able to provide some of these services better than we do. But you can never find, or you can't find any other entity that provides all of these services in one place. So when you think about AFX, you think about us being the reference point for commodities in Africa, and you think about us being essentially the everything store, the Amazon of commodities in Africa. So I believe that's largely all of what separates us from every other exchange that currently exists, our ability to play across every single value chain that exists in the commodities ecosystem.
All right, Michael, as long as you're making me money. But aside from the existing spot and fixed income contracts, traded on the exchange, how close is the exchange to, listing other alternative commodity products?
Thank you for that question. So some of the things that we've already done this year is we've sort of expanded our product line. And that's with us listing cashew, which you're well aware, in the month of March, and also providing sesame in the OTC market. But in recent time too, we have been in conversation with certain other third-party entities that could also provide alternative commodities for us to trade on the exchange. And I'm talking about that. What I'm talking about is regards to the MOU that we signed last year with the Dubai Gold and Commodities Exchange. And that's a conversation that could eventually lead to us leading gold as a commodity that is tradable on the exchange. And we're also doing extensive research into the energy market and looking to design products that will be, that could essentially help that ecosystem and would also provide an avenue for people to trade those particular commodities. But to truly answer your question, I think that we're pretty ridiculously close to listing alternative products on the exchange. I would say that before the end of this year, you're going to see something that will make you smile, and that could potentially make you money, laddie.
We're looking forward to that. I mean, particularly the money part. Thank you very much, Michael. Well, we're still going to be talking about the input financing program. Well, that is an initiative that unlocks financing from retail and institutional sources for the production activities of smallholder farmers, created to align with the United Nations Sustainable Development Goals 1, 8, and 12, no poverty, zero hunger, and decent work and economic growth. The program has scaled due to AFEX's proprietary advanced technology, expanded outreach and warehouse infrastructure, and product innovation. Let's hear more about this from Kamaldeen Raji, the Managing Director, AFEX Fair Trade Limited. Thank you very much, Mr. Raji, for joining us. Good morning to you.
Good morning. Thank you for having me.
So AFEX AFEX has been carrying out input disbursement to smallholder farmers for the past 5 years. How did that initiative come about, and how has AFEX carried this out so far?
Thank you so much. Let me be a bit historic on this question, because in Nigeria, we have a very different climate. And every other exchange, like in any part of the world, we just jump up and start doing exchange. But in Nigeria, there's nothing on the table to be exchanged. So from the inception, FS needs to go back to the farmland, go meet the farmers who are the primary producers of whatever is going to be exchanged as an commodity exchange. And we need to do this by making sure that the 3 or 4 major things that are needed by farmers to be able to go back to the farm are provided for them. Number 1 is finance. Number 2 is input. Number 3 is storage. And the last one is access to market. So providing them with all these has really helped us to start the right way. So what we did with the farmer was we verified, profiled them, and put them on our platform, so that whoever we are working with, you can be accessed anywhere in the world. We know their farm, we registered them, we know their community, we did the legitimization process with the community heads. And from there, we were able to meet up with their demand for production. So after production, we linked them to the closest warehouse, just like a vision by our forefather that nobody should travel a very long distance before he or she could access education. But in this case, we conceive it on our own that nobody should travel anywhere far away from before they could access storage or access to market as farmer. So with this, we link them to input at the right time. And when I say the right time, that is as soon as the rain sets in. Some days back now, we started disbursing input to farmers so that they can start the season on a very good note. And this means that the farmers are ready for production again. So over the years, we have been doing this to farmers. We follow up with the outreach program that we used to engage them. This is the education arm of the old scheme, that is teach the farmers, bridge the gap between the farmers and innovation. They get the right education on best agronomic practices and other things that are needed on the farm. They have the right access to input, like a crop protection product that can help them maximize their production. And this has really led to increase in yield for all our farmers. And all our farmers have been able to be moved up. And nobody's thinking of running to anywhere in the world or running to any urban settlement in Nigeria, because the value of whatever they are producing is appreciated. We link them direct to the processors who are in need of all this product. And with this, there's no third party, there's no intermediary, which means the farmers are encouraged to go back to the farm because they know the value of whatever they are producing is appreciated, and the price in money can always move up. So this has really helped us over the years.
Okay, Mr. Raji, but Apex recently had a cocoa flag-off event in Osun State to kick off input disbursement to about 2,000 cocoa farmers. Can you tell us more about that program and other plans for cocoa?
So thank you, Ladi, for that question. Recently, FX had a program in the Southwest, and that is about the cocoa flag-off. Because a lot of people had the misconception that FX is limited to the northern part of Nigeria, because that's where primarily the production of grains start from. But you know, cocoa being a major foreign earner for Nigeria, and in the process of diversifying the economy into agriculture and some other things, through agriculture and some other things. So we have old plants, old crops in the cocoa region. And what we did with the farmer was that, okay, let us make sure that your old crops, old trees are still getting you the right yield. And from there, we can support you to get the new seedlings to be able to meet up with the demand of these years. And that is to say, before now, we worked with less than 500 farmers in the cocoa region. But now we are moving to 2,000 to show that, okay, we are ready to take that big leap and be able to affect life positively. And that is to show to the world that farmers can contribute immensely to the growth in whatever, in a very good dimension. The GDP, will be positively affected, and that means we are ready to show to the world that agriculture is a bigger foreign earner. And apart from that, other things that are in the pipeline is that FS is working this year to ensure that we take a big jump from what we did last year, which is 35,000 farmers, to not less than 200,000 farmers this year. And that is to show that there will be continuous production during the wet season and at the same time during the dry season, all across board for major crops that are storable, not perishable goods, but major crops that are storable across our operation locations.
All right. Thank you very much, Mr. Raji, for your time there. Kamaldeen Raji is the Managing Director, Apex Fair Trade Limited. Okay, let's look at the market numbers now. And Aniete is standing by to tell us, well, Aniete is still all red, I guess.
Yes, Jimmy, you might see me smiling, but I tell you the market is not smiling, still not smiling, and that's because we're still in the red into the second day in the week. And then that's, of course, tells you that the market was down by 0.08% yesterday, another round of bloodletting, another round of profit taken by investors. So, but when you take a look at the performance in sectors, it shows you that the banking sector was down, and that's because of the share price of GT Bank was down, and then the key components of the insurance sector, AXA Mansard to be precise, led the insurance sector down. Two other sectors were up, as you can see there. So now to bring us up to speed of what's going on at the equities market, let's join Tajuddin Olayinka, stockbroker at Valmont Securities. Thank you for joining us, Tajuddin.
Thank you. Good morning, Anita.
Okay. So now, can you bring us up to speed with what's going on at the market? We've been seeing a lot of bloodletting. We're down 5% year to date and 4% month to date. So, and the market has defied all factors that we expected to lift it up. So can you bring us up to speed on this?
Okay. I think what has happened is that, if you look back to the last 5 trading sessions, in fact, if you look beyond that, starting from Monday last week, market has been maintaining that, negative, bearish trend. what happened was that, markets wanted new information. Anytime market is bereft of new information, you see, big players like the institutional investors stay out of the market. And anytime they start of the market, that robs the market of, the appropriate demand that the market requires. So, for during that period, you see some investors who don't seem to understand what is going on, also engage in panic selling or profit taking. So, in the last 1 week, or let's say even in the last 5 trading sessions, what we are seeing is that key institutional players stayed out of the market because they wanted to get information as to the direction of the economy, the FX rate, what CBN will do with regards to unifying the exchange rate, and everything about the MPC everything that took place yesterday. So now that we have more information coming from the authority as to what direction they want the economy to go, and especially the exchange rate, I want to see that there'll be some semblance of stability going forward. So what happened was just because key investors, insurance investors, stayed away, and you could see that also in their in the value trading and volume. So clearly that was what happened.
But just 2 days remaining for trading at the NGX. So right at the moment, are we still expected to see this downturn continue into the end of the week?
Barring any other negative news around the economy or the market, I expect a quick follow-on. Actually, markets should go back into bargain hunting now that we have a unified exchange rate in place, and then the MPC, already give a direction as to what we expect about the economy and the performance of the listed companies. If you look back also to the first quarter results of some of these companies, the results were not bad at all. So nothing about the market, nothing about the listed companies that suggests that the market will be bearish. But anytime, like I mentioned earlier, anytime you see, key institutional investors like the PFAs, the fund managers, all these asset managers, all these big players, once they are not sure of the direction of the market, especially the economy, and they are expecting new information to come out, they stay away. Anytime they stay away, market goes into bearish trend. That was exactly what happened. So right now we are expecting to see an improvement, gradual improvement, because markets expect that the foreign investors to return to the market as soon as possible. So with this unified exchange rate, I hope to see a positive market going forward. It's just a temporary thing. Nothing wrong about the market. It's just the players that are taking the pace on their own.
Okay, so thank you for bringing us up to speed on developments at the equities markets, Tajuddin. Tajuddin Olayinka, stockbroker at Valmont Securities. So, Jimmy, that's it. That's all we can say. The market is still in the red, but we continue to keep optimism for the equities rebound.
Well, as far as we continue to see some kind of uptick in yield in the fixed income market, perhaps investors will be looking towards that side for now. Let's just hope that maybe when the market starts releasing the results, then we'll probably see some kind of uptick in the equities market. But you never can say. Never say never. Anything can happen as long as this market is concerned, as long as we see a catalyst that will just spur up the market. All right, thanks, Anita. We'll take another quick break, and when we come back, we'll do an opening call to London. All right, let's get our first words from Juliana in London. Good morning, Juliana. Vectura, one of Britain's biggest biotech firms, has been taken over by the American private equity group, the Carlyle Group, in a £958 million deal. Tell us more about this deal.
Yeah, good morning, Chimase. Shareholders are pretty happy with this deal. As soon as it was announced this morning, Vectura, which sits on the mid-cap 250 index, their shares rose by about 32%. As you said, they are an English-based pharmaceutical company, very well known for producing inhaled medicines, and they've just ventured into COVID-19 medicines. They're hoping to have a vaccine ready by the end of the year. Shareholders were mulling mulling over this £900 million takeover by Carlyle. It's been accepted, and yes, they're pretty happy with that. They think this new round of investment is going to increase their market capacity, and they're expecting by the end of the year their revenues to triple. I believe they're expecting the takeover bid to be sealed and delivered by the third quarter. So yeah, good way all round. This announcement has lifted the FTSE 250 this morning.
In another development, China has overtaken Germany to become the UK's biggest single import market for the first time since records began. This is all about Brexit disruptions, I guess.
Yeah, a little bit about Brexit. I would say probably more to do with COVID. And it has been a long time coming. As you said, since records began in 1997, Germany has been Britain's biggest import market, besides one or two periods where America managed to take them over. But during the lockdowns, the need and want for Chinese textiles grew, particularly to make PPE equipment. And of course, because we were all in a lockdown, lots of people were buying Chinese electronics. So in the first quarter of this year, as you were saying, partly due to Brexit, German imports declined to, I believe, about £12.9 billion, while in the same period, Chinese imports grew to about £16 billion. I believe both sides are hoping that once all of the Brexit bureaucracies start settling down, Germany will once again become Britain's biggest import market. But who knows? We know that China is the world's largest factory, and the British people do like lots of Chinese goods. But it has to be said that as a whole, the EU does still dominate Britain's import market, just not Germany.
All right, thank you very much, Juliana. We hope to get more updates from you later in the day.
Thank you.
Okay, let's look at the crypto market. But first, let's listen to what the central bank governor, Mr. Godwin Emefiele, had to say about the recent drop in the crypto market. Let's take a listen.
Of course, we saw it that the market collapsed. Elon Musk came about, said he tweeted initially sometime about the time we said our banking and payment infrastructure will no longer be available for cryptocurrency transactions. He tweeted he was going to invest, is it 1.5 or $50 billion in crypto? $1.5 billion in crypto, and the rate went to the highest roof. And he now tweeted again and raised a few concerns, and the thing plunged. Elon Musk himself has decided that he will no longer deal in crypto.
That was the central bank governor, Mr. Godwin Emefiele. Well, Ladi, I thought Elon Musk was only concerned about the implications of Bitcoin mining on the environment.
Exactly.
Not that he does not believe in crypto anymore. I'm sure you have all that details there.
Well, the truth is most central bankers are not a big fan of Bitcoin or the blockchain, which is understandable. It's actually new technology. But let's take a look at some of Elon Musk's tweets. The first one, he said, Tesla has suspended vehicle purchases using Bitcoin. We're concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Cryptocurrency is a good idea at many levels, and we believe it has a promising future. But this cannot come at a great cost to the environment. Tesla will not be selling any of its Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We're also looking at other cryptocurrencies. So he is still quite bullish on cryptocurrencies. That's Elon Musk. Let's look at the other tweet there. To be clear, I strongly believe in crypto, but it can't drive a massive increase in fossil fuel, especially coal. Then the next one. You know he's a big fan of Doge there. If you'd like to help develop Doge, please submit ideas on GitHub. So, you know, from these tweets, he seems still quite bullish. And he has said he's not sold any of his $1.5 billion investment in Bitcoin. So,
it's still there.
It's still there. It's still there. It's still there. Let's look at the market. Market cap, $1.78 trillion. Up about 6.69%. 24-hour volume is down about 14%. Bitcoin dominance dropped there at 42.80%. Let's talk to Rume Ofi, now digital market analyst. Hello, Rume. Okay, guess we lost rumor there. Let's look at price Bitcoin, $40,707 this morning, up about 4.84%. 24-hour volume, $57.84 billion traded this morning in Bitcoin. Let's look at the charts here. Bitcoin right now has made a new local support at $30,000, about 31,000. Now it's bounced up to about 40,361, nearing the 200-day moving average there on the one-day chart. So if it breaks this 200-day chart, who knows what could happen next? It could come back down or still go up. So it remains to be seen. Price of Ethereum, 2,899. Incredible recovery there for Ethereum. Fell as low as about 1,900, below the $2,000 level. It's up 9.33% this morning. 24-hour volume, $50.05 billion traded. I don't know if we have Rume now. Hello, Rume.
Hello, Ladi. It's a good morning.
Good morning, Rume. Great to have you. So we have Bitcoin, altcoins. You know, they've been recovering, well now. And my question now is the bull market still on?
All right, the bull market is still on. Today we can see Bitcoin doing about $40,000. Personally, I'm waiting for those in the U.S. to wake up and see how far they could put some funds in the market for it to go up and how we could get more better. But I'm actually looking at 42,500 to flip really bullish for now because altcoins are also coming up, but Bitcoin have to ride for a while first before we see an emergence again of another altcoin season. But for now, all attention is on Bitcoin. We are still in the bull season. This is not the first time where market is going down, and this won't be the last. I know a lot of weekends are shaking off now, and the real guys are still keeping their heads straight, still standing, and the best is yet to come.
Okay. All right, Rume, I don't know if you listened to what the central bank governor, Godwin Emefiele, said. He talked about cryptocurrency being encrypted. So you can't really see transactions between two people. You're a blockchain expert. Can you tell us what the blockchain really is?
Okay, this system, I think the CBN governor just said his own part. Coming up from a tech perspective, cryptocurrency, most especially the flagship cryptocurrency, Bitcoin, is not anonymous, as so to say. It's pseudonymous. That is why we have issues of crime being paid with cryptocurrency or Bitcoin, some other cryptocurrency and Bitcoin being actually investigated and tracked. So that's why we have platforms like Chainalysis. We have all of the tools that you can use in tracking bad actors using Bitcoin to do various dubious things. So if you ask me, I don't think that he has more information about that, and it's possible he could do to involve stakeholders that are in this technology because he's coming out from the finance point of view. So we could advise him better on how all of these things could work really, really well. It is not the way they are looking at it. There are gains in this, and the country as a whole has more to benefit, most especially at this time where we are going through double-digit inflation and all of the economic issues happening globally.
Okay, but Rume, my concern is that one man, Elon Musk, can sway a whole $2-point-something trillion market with a tweet. That is actually concerning.
Okay, I think Elon Musk, it's not just anybody. He's a billionaire, what about $152 billion with 5 companies. He's a global figure, if you ask me, and he has influence. Among all of the world richest, I think he's the only one really, really active about digital assets and Bitcoin, basically, and other cryptocurrency like Dogecoin, right? It's what being concerned about. His interest is really, really welcome, and it's amazing. I think other billionaires are going to come in very soon, and a meeting was convened about yesterday with the CEO of MicroStrategy, one of the finance companies in the U.S. where they've been buying Bitcoin all before now. They've actually convened a meeting to raise concern about the energy consumption of Bitcoin, right? So they're going to be how they manage energy consumption using better form of energy that would not affect the environment. I think it's concern. Your concern is actually very valid, right? For just one man, but this is the infancy stage. Viken is just 20 years old, just a decade past now. We will get better. He's just too young. This is the formation stage, and when we get better to maybe $100 trillion worth of market capitalization, we won't be seeing just a tweet changing the market dynamics.
All right, Rumi, thank you so much. We'll keep watching to see how the market matures. Thank you so much for your time. So, Jimmy, that's it.
And I say the market is actually maturing very well.
Maturing.
And then if Elon Musk is talking about whoever that has an idea of how to develop the Doge should come up. But perhaps you do.
Well, maybe.
So what coins should we be watching?
Well, for now, the altcoins are actually, doing well at this time. They've been recovering well. But I'm still watching Digibyte and ZRX at this time.
All right, we'll keep watching.
Yeah.
But as we will always tell you, please ask, make sure you get better information from professionals before you go into this market.
Yeah.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.